All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Friday, April 26th. So, as always, I do an end of the week video, and it's one of my most favorite times to do, probably the favorite time for me to do a video because it's a nice summary for the week. The week is over, trading activity is done for the week. Especially with the weeks that we've been having this year, it's kind of the icing on the cake to kind of just review and talk about what we traded for the week. So really just impressive price action, I think, this week, considering all the names that were due out for reporting wise. I think something like, what was it? It's close to, but less than 200 names reported in the S&P this week. And I forget how many names it was in the Qs, but I think about a third of the Qs reported this week. And of course, Amazon reported last night, which, kind of had that weird reaction. I tell you, these guys on CNBC, and again, I'm not trying to criticize them, but I think it was Gene Munster who came on and said that he didn't like the quarter in Amazon, and drove the stock down in the aftermarket. I tend to listen to the earnings calls. It's one of the things, having a Bloomberg is expensive. It's like the price of a sports car every year, but that's the way somebody mentioned that analogy with Bloomberg. And the amount of hours that I'm on Bloomberg, it's probably better that I have a Bloomberg rather than a sports car. But that's the cost of it. But anyway, it's what, before I get sidetracked, because I do that a lot on especially Fridays. But it's one of the nice things is to go through and listen to the earnings call. It's really valuable to spend some time, and it's tough because each one is, could be anywhere from 45 minutes to 2 hours, so it does take some time. But if you're serious about trading and investing, I really find some great information from them. And Amazon's a shorter one. They don't even give most earnings calls. They give, the management gives about a 10 or 15 minute summary of what they did. Amazon goes right into Q&A, and theirs was only about 45 minutes long. But I went through it this morning, because last night I was watching the Giants pick horribly for the draft. That's another story as well. But I listened to it this morning, and they're so big, right? Amazon is such a big company that I think that you can, and I heard a lot in the analysis from what brokers put out today, that you kind of just talk about different business segments, and this is really valuable, I think, because a lot of it, one of their most profitable segments was the cloud and what's going on in there. So that really, taking that information from the earnings call and some of the analysis that brokers put out today is really useful, because that means all the software names are, they all went up. And I think a lot of that had to do with not only Amazon, but a couple of the other names that reported this week, such as Microsoft, which absolutely crushed their numbers, which we went over in one of the videos earlier in the week. As well as ServiceNow. ServiceNow was one of the earnings calls that I listened to this week, and man, they are enthusiastic about what their business line, what it's doing, and the growth that they have. So that really, if you're skeptical sometimes about investing in groups that have had a huge run, listening to the enthusiasm that comes out in the management call really can kind of get you over the hump in terms of investing. And I did a video back when Salesforce, I'll retweet this over the weekend, but I did a trade idea video about a month and a half ago. It was right after Salesforce reported earnings, and I said the same thing. I listened to the Salesforce earnings call, and another one that reported right around there. Oh, I think it was Coupa Software. And you listen to these guys. And the other thing that comes out in some of these earnings calls is the analysts. It's different than a Tesla earnings call where they're kind of combative. Some of the analysts, the first thing they say is congratulations on your quarter. So they know, and that they're going to raise their price target, and so forth and so on. So again, you could really extract. But I said I was bullish, a month and a half ago on Salesforce and Workday and a couple of the other ones. I think Splunk was the third one that I mentioned in that video. But in any event, let me get right into the price action. So yeah, I mean, really impressive to see Amazon close at the highs after kind of a shake and bake. I was saying earlier today in the trading room, I said, who thinks this Amazon can get outside of value? And sure enough, I had set an alert because I was like, I'm not going to watch this thing all day long. And it got above value and it really never turned back. It kind of came in here a little bit, but then it just kind of took off with the rest of the market. So very, very impressive. I did not trade it today. I had put on a small earnings trade, and I by accident had a target out. I was actually going to hold it into next week. So stupid me. I had my target out in the trade, so I would have liked to hold on to it. But I was like, what is that noise? The cash register. And I was like, I just sold Amazon. And I think that was someplace in here for the day. So listen, that's fine. It's a winner. Um, you know, so you just kind of move on from there. So let's talk about the price action, and I'll go through some of the charts. But let me talk about the price action, which I always like to do at the end of the week. Um, we finished up. If you look at the SPY, first thing is the SPY performance. Um, Up another 1.2% for the week. The Dow was flat for the week. A lot of the Dow is price weighted, which I won't spend 5 minutes to go over the difference between price weighted and market weighted, but you can Google it. But basically, what that means is it's an old school way to calculate an index. Every name gets the same amount of shares in the index, so it really is whoever has the higher price. Pulls the index, and that's why the Dow is kind of flawed. I like that it just has 30 companies in it, but the way that the weighting scheme is, it's really biased. That one name or two names, because what I'm thinking of, or what I'm going to pointing you in the direction of, is 3M had a horrible week, and that pulls down the whole index. And SPY, that's not going to happen in SPY or the Qs or IWM because they're market cap weighted. Going over to the Qs, another strong, huge week of outperformance or performance, up 1.7%. Notice that the international ETFs were down. I want to talk about that for a minute, but I'm gonna wait to talk until we get into until I go over the international performance. But a lot of that had to do with the U.S. dollar being strong. Big concept in there. I'll try to go through it quickly. But then if you look at TLT, TLT also had an up week as well as gold. There's a great couple of questions from the trading room this week because I did go long bonds this week. I thought they hit crucial support. Well, maybe not crucial is too big of a word, but they hit support. After this VPOC was taken out, Virgin Point of Control. Let's wait till this chart comes up here in Thinkorswim. I think I have too many applications open again. But this was the Virgin Point of Control that was taken out, which was a great exit point if you were long. But notice that it's come into the 50-day moving average and bounced. Also, I think a better level is on the weekly chart. I'm going through this quickly because I've gone through this chart like 5 times now. But here's your support, 122.46. That got me into a trade, and I'm up in that trade a little bit this week. But a great question that came from the room was, can bonds and equities go up together? They can. They're different. I think a lot of people associate bonds with risk off. But over time, this is just a 5-year chart. You could see that, it's clearly back in 2016. So bonds are in the numerator, equities are in the denominator, and you could see that TLT has underperformed, especially around here. This was back when the election was, and it's underperformed over the last couple of years, but not that greatly. And I think from time to time you're going to see bonds outperform, but I don't think it's just a straight. I mean, look at this relationship from 2014 to 2016. So if you see sideways, that basically means they're one is not outperforming the other. Obviously we had risk on over here, and equities outperformed, but I don't think that it's generally the relationship has to continue in that in that facet. I think both can actually go up together. So, but anyway, the great question that came from the trading room. Let's and also gold, which I'm not going to show here, but gold bounced on the 200-day moving average after a decent decline. So, by the way, this is our weekend newsletter. This is if you are a member of Tribeca Trade Group, this is what I provide over the weekend, a whole game plan for the week, things that I'm really concentrated on for setup wise. I don't take every one of the setups because then I would just have too many positions on, but I really try to kind of adhere to the plan for the week and focus on a couple things that I think are right. I change it as we go along. I look for some new setups. Like I think DRI, I noticed that after I sent out the weekend newsletter and I sent this out on the private Twitter, this was a huge, huge win this week. I was a little bit frustrated with the market maker, so I probably exited the trade a little bit too soon. But I sent this out on Sunday night, and I think the chart was right here. So I thought this was really nice support coming into the top of value, and this was a hell of a swing trade for the week, and I'm completely out of it. Like I said, I got a little bit frustrated with the market maker. Just didn't feel like the options were moving enough in price, but we got out of that one pretty nice. Let me bring up my trades. Let's see what the final price was on that one. Again, I think I may have sold a little bit too cheap on that one. DRI out at 570, paid 410. So nice little trade there. And that one. So I've got last week's performers up, the week before, and then this week. So we talked a little bit about software, so it's pretty funny because I always full transparency, and I was moaning a little bit last Friday's video because I had my first down week, which again was a small down week. But first down week in 2 weeks. Sorry, not 2 weeks. In roughly about 2 months. And then this week I came roaring back. And one of the things I said was in last week's video is, I've been overweight the software group for probably about well over a year. And I said, seeing some of the rotation that happened the week prior, I said, maybe I'll go back to like an equal weight. And I still held two positions in coming into the week. One was Salesforce, which did very well this week, and I think I had ZS coming into the week. But you have to change. If once I saw the information that came out from Microsoft and ServiceNow, I'm like, hey, this group is, it had a little bit of a dip. I still think you're going to get times, if you felt like you've been left behind. This was also a question that came up in the trading room. They said, what do you do with all these names that are breaking out all over the place at this point? I said, well, you kind of ride the ones that you're in. And if you've missed a lot of the moves, you just kind of be patient and not chase, because the software group, what happens every couple of weeks is people take profits and they all sell off, and at that time it feels like the world is ending because every one of them starts to go down. But that always, for the last year, that's been a buying opportunity. So that will happen over and over, I think. I'm not making any predictions, but just based on what has happened over the last year, the group comes in, they settle in for a couple days, and they end up being buying opportunities, and then they all go back out to 52-week highs. So that's what I would be looking for if you want to get more involved. And then the other thing is you could also scale in a little bit, and so that you have some exposure. But really, you just have to stand ready to kind of wait until they sell off a little bit, because again, I think it's in the cards for those names, because they are not. One of the negatives is they are not a cheap bunch of stocks. So they were up 4.1%. Also, the FANG stocks crushed it this week. Netflix reported, they ended up going up after the report, and then just altogether, Facebook, of course, how could I forget Facebook? But Facebook, crushed it and moved out and above. VPOC takeout, which we talked about in the trading room that day, right in here. And again, great place to take targets, to take some profits in Facebook if you were long. Also, biotech and healthcare. Remember last week I was on Bloomberg. They asked me about that. On Monday, they said, one of your previous calls was you were looking for a breakout in healthcare stocks. Clearly, that didn't happen. They said, do I think that there are buying opportunity coming in? And I mentioned three names. I mentioned Abbott, which we traded in the room this week. I did take this trade off a little bit too cheap. Somebody asked me about this in our member webinar earlier in the week. They're like, "Why'd you take this trade off?" Because I'm a dope. It was. I made some money on it, and I thought that was pretty good. I thought it might get hit with overhead resistance, but look at this Abbott come back. And this is what I stressed with the healthcare sell-off: is that you will find some great gems when a whole group gets taken out to the woodshed, like it did because of political headlines. I thought there was going to be some great buying opportunities. A lot of traders profited in the trading room on Merck. Real nice bounce on the 200-day moving average. So there were some really good buying opportunities. We played TMO as well last week. TMO just kept on going up as well. That was one name where we saw calls go into the red candle. I think that was on Friday last week. So biotech did well. Also, the banks have been pretty consistent in here the last 2 weeks too. They haven't been on the top of the list. Let's see, where did banks finish last week? Yeah, they were up 2.5. Financials XLF was up 2.5% the previous week. So strong the last couple of weeks. I'm going to bring up that. Why don't I go ahead and instead of saying I'm going to do it. I've been long XLF. Remember, I talked about this about 2 weeks ago on Twitter. I asked people if they liked the chart. Some people said, "Oh, I just can't play the banks right now anymore. They've been so frustrating." I said, "I agree, but hey, sometimes you have to cover up the ticker on the chart and just say, hey, what a nice looking setup this is." So I structured this trade. I didn't want to share it with, this video goes out to members and non-members. So I didn't want to reveal what my XLF trade was because it's not fair to members. But now that it's up nicely, I'm long the January 23 strike call. So I actually went in the money because XLF is kind of a slow mover. You can see it's only $27 ETF. So of course you could play that in stock as well, but I went in the money calls. And those are working out pretty nicely now for XLF. So again, do I love the financials? Do I love their story? No. But I think as a chart for a trade, I think it looks okay. A couple other, sticking with this group, I want to go over the Berkshire. This is one I talked about on Bloomberg as well this week as a really nice setup. Look at what this is doing. So look at the flag that this put in. Really nice digestion. So again, I've talked about this was in the member setup area in the weekend newsletter. What's really I think impressive is the weekly chart. Right, so you can go long now. Notice on last week when I was talking about it, I said we just didn't close above value, so it wasn't ready. But we did. We have closed above value, and now you can set your stop to 211.53. Somebody asked me as well, which I want to make sure I'm answering the question. They said, "Do you think Berkshire's in the short term is extended?" No, absolutely not. It did nothing last week at all, or actually this week. It just chopped. So I don't think Berkshire is extended at all. I think the move is just starting for Berkshire Hathaway, and I think it can get back to the recent highs, and that would be a good place to take some money off the table. I'm also sticking with the financials. What else do I like in this group? I went long. I did just a small trade on this one because it's a new name. This TradeWeb, right? I mean, this is kind of almost like a software play. But I just went long on the 20-day moving average. Again, there's no history to really rely on with these new IPOs. So you just basically pick a line or pick a level to trade against, which is very easy. Make it simple. So my long is against the 20-day moving average, which is the purple line. Didn't close on the highs, but it's moving in the right direction. T-Web. So what didn't do well this week? A lot of the commodity names. Semis, of course, took a breather. I think that's perfectly expected. My thoughts on Intel, which I said in the trading room as well. Intel is not the whole semi group, but sometimes when a group is pretty overbought as the semis were, they're going to come down on some bad news. But, you know, Intel, I don't think they have their own issues. So I don't think they represent, even though they're a very large chunk of the SMH ETF because it's a market cap weighted ETF. It's a large weight, so it's going to pull that ETF around. But you know, I think there's buying opportunities when a whole group gets, you know, unfortunately it was overdue for the group to kind of get hit a little bit. But you know, you're able to kind of find which names have nothing to do with Intel. So I thought there were some names that were buying opportunities. Speaking of that, I'll go through the Xilinx chart, which talked a little bit about yesterday. I got long some Xilinx. A couple traders played this today on the long side, which did very well. You got a nice hammer. So I talked about this one virgin point of control being taken out yesterday. We did have one more, and we've actually have a couple once you go through the 1 hour chart. So if you bring this up, we went through this one. We also took this one out. Now there is another one down here, but I think this has now gotten far enough away. So I don't think you have to worry about this one at 106 right now. I think it's got far enough, but this was right around the open where it took this one out. So perhaps it just needed to take one more of these out before it could rebound. But we are now, if you look at Xilinx. So again, you know, I think this Xilinx is interesting because they didn't put out a bad quarter. You know, a couple analysts didn't like what they had to say. Goldman downgraded them. There was a couple other price target reductions, but you know, this is a name that went off on a huge run. So I'm still long this name. Nice hammer bar. You know, possibly we'll try to get out of it next week, but back above this virgin point of control, which is a good sign. Big move, big range today for this. All right, so we're covering a lot of territory. The home builders fell this week, but yeah, so energy stocks. Yeah, I mean, such a hard trade. And you know, you could trade this group, but I think you just have to be disciplined. I think XOP is at an interesting level here. XOP, there's a pretty large spread that went up. I'm not certain what they did here because they also threw in January 35 calls, but they may have bought the 33s, sold the 34s, and sold the 35s out in June. So, you know, so maybe somebody's looking for an incremental move. I still think this virgin point of control is up here. Maybe that's what somebody's shooting for this to make a move right up to here. It's funny how they picked the same level as this virgin point of control. But so that's one particular trade. But I think with this energy group, you know, just like for the financials, these groups are difficult. And I know that traders like to, for whatever reason, some retail traders, they always try to go, they think it's a value play and try to buy things that, you know, have gone down. This is a 5-year chart of XLE over SPY. How many times you could have said that this has been a value play several times in the last 5 years. By the way, I found this chart. Somebody put a similar chart out on Twitter. I can't remember who it was, so I'm not trying to plagiarize because I did see this on Twitter first, and it made me think. Which a lot of times is Twitter's great. Great ideas, and it makes you, that's the beauty of it. It kind of makes you think a little bit. So I apologize. For the life of me, I cannot remember who I saw this tweet from, but just so I'm not plagiarizing, somebody else put this out. XLE over SPY. But I think the point of the point of this is that stuff remains cheap for a long time. Look at the 10-year chart. So trying to find the bottom in this stuff, I find is a losing endeavor. I know some traders like to look for a reversion to the mean, thinking that, oh, it's down, it's a good buying opportunity. I mean, you know, it's been doing this for years. The energy stocks versus this, and I just think it's not a great place to be in, except for a small size position. So anyway, but just good to put these things in perspective. The other chart that I thought was really interesting this week was the Qs and IWM. So if you, I think IWM. We'll look at a couple of these charts because IWM did come back pretty nicely this week. This is the IWM over the Qs. Again, just another relationship that is kind of a head scratcher with this one. Over the last, this is 1 year, but let's look at over the last 5 years. Man, the Qs have really outperformed. And then if we put this also into context with IWM over SPY, I'm happy to see this hold the December lows. I've referenced this chart 100 times now, but I'm glad to see that the lows have held. All right, so we're 25 minutes into the video. I don't like to keep these videos going much longer. What else did I want to cover? Let's just bring up my. International. Let me just talk about this concept very quickly. With the dollar went up almost 1% this week. So really, there's again another great question about global breadth. If you remember last year, what was happening that was a warning signal? U.S. equities continued to go up, to continue to rally, but everything else internationally started to break down, right? Emerging markets went down. International developed, meaning Japan and Europe, were going down. So the U.S. was kind of like the last man standing for most of last year, and people just kind of got a little bit numb to it, and then finally it gave in. The U.S. kind of fell back to what all the other regions around the world were doing. Is this year different or the same? Well, I think first of all you kind of have to look at this in the right perspective. I think if you strip out the currency effects, so I'm not necessarily cherry picking here, but if you look at a chart of HEDJ, this is because right now the euro is basically breaking down. But if you strip out the effect of the euro and just look at European equities without that currency effect, and if we put together, let's say maybe a 10-year chart of HEDJ, and this has dividends, it's actually at a 10-year high, right? We did go out to 10 years, right? Yeah, 10 years. Believe it or not, despite the bad news that has been coming out economically, these stocks as a group, HEDJ, is at a 10-year high. So that's not a bad thing. That's not a bad thing, right? This again is Europe hedged equity fund. Let's look at the DAX as well. But so I think it's important to look at things from that perspective. So bottom line is this is good. So even the DAX, even though they've been coming out with bad economics recently, I think they've had several data points that are not good. But look at this. It's almost the 50-day is crossing over the 200. That's a golden cross. That's not negative. So again, that's pretty good market breadth. So I think sometimes you have to ignore the headlines. The economics that comes out sometimes is a little bit delayed. So maybe there is something good that's going on. Again, price knows all. Price is a leading indicator. So something positive is going on here in Europe, believe it or not. All right, so that's kind of the last concept that I wanted to go through. I'll put out my P&L on at the end of the month. No jinx. We've got 2 more days going on for the rest of the month. But I'm back at my P&L's back at 52-week high. 2019 highs. So I was singing the blues a little bit last week because I wasn't happy with my performance. I overtraded a little bit in a choppy market. Not this last week, but the week prior. But my P&L is back at 2019 highs. If you're a member of Tribeca Trade Group, I hope you're doing as well and following some of the trades and following some of the ideas that we're putting out. Again, I will always put out a lot more ideas on the private Twitter feed. I talked about, one of the things, and I'll kind of leave it here for the week, but, as I said, we're getting close to the weekend. I'm seeing a lot of good looking charts. I could go over some more charts. One that one member brought up I'll call him Bob because it's I don't think he's going to mind if I use the name Bob because we've got like 3 or 4 Bobs in the room. But look at this chart in KMI. This is pretty nice. There's a lot of different setups like this. Look at the VPOC being taken out. So again, this was his idea, but we're seeing this. We went over charts like in the last hour of the trading session. There is a lot to look at that looks pretty constructive. Look at Palo Alto. This thing looks like it's ready to go as well. I'll go over just a couple of these charts. Salesforce, which was my biggest position coming into this week, almost back at 52-week highs. I restructured the remaining trade, remaining portion of the trade. I kind of rolled out in strike a little bit. Just a few other ones. Coop, coming out. By the way, this has been going on. This has been digesting now for a while. Twilio, back at just about back at 52-week highs. Workday at 52-week highs. So again, this is not by accident. I added a little bit of Zscaler today, back above that downtrend line. So I like that a lot. Splunk is another one. So I mentioned I'd go through these charts. So so final thoughts are you don't. I think personally, and the video is for information purposes only. I'm not giving out any advice, but I think that you're going to get chances like today, like this. We've seen this now a couple times, so you don't have to rush in on the open. Or I'll bring up SPY, or maybe I'll bring up Qs, right? But I just wanted to give you a little bit of a visualization. You're getting this opportunity in the morning, where as long as you're disciplined and don't buy on the first or second 5-minute bar, you have this, right? And this has been going on now for a while. So if you're patient, you could. Look at the pattern here. This was Thursday's price action. So you're getting these little dips, even though we're marching higher. It's phenomenal. There's very few days where we start the day and then just march higher. You're getting this opportunity after the open, like an hour after the open to buy the dip. It's pretty. Anyway, that's what this week was. I don't know if we're going to get that next week, but I think if you're just patient and just not rush into names, one of the things that I talk about a lot is scaling in, so that you don't get overexposed when the market just the bottom falls out for the first hour of the day. If you go in 20% at a time or 1/3 at a time, it'll work itself out if you still feel tempted to buy on the open. What else did we cover in the trading? Yeah, so that was one of my main points. Yeah, and also just continuing to kind of take off risk when we get these nice ramp up days. So that's it. I'll leave it here because I'm over 30 minutes for the video. But if you're not a member, go to TribecaTradeGroup.com. You could also email me cfromhertz@TribecaTradeGroup.com, and I'm happy to ask any of your questions. I am flirting with this like part-time membership. If you just want access to our Twitter feed and you can't be in the room all day long, I could talk to you about that. But we've got a phenomenal group of traders that are in the trading room every day, providing super ideas and just trading their what off. And it's such a great environment that we have, that everybody chips in and helps one another. We're all making money together this year, so it's been just awesome. So thanks for watching the video. Have a great weekend. I'll see you back on Monday.